Hello everyone, the same one again from Finance and Analytics Services Team LLC. Hope you had a great, wonderful weekend and a happy Moon Festival. So for those who don't know, Saturday was you can call me Autumn Festival, some calling that. So Chinese based on the lunar calendar, August 15. And at the time you look at the moon, it was still a very full moon, very round and big and bright moon, and it was really great. So and then normally people get together and have dinner together. So just want to give you a quick recap before I start to talk about the market and what I want to talk about. Few stock that will share some opportunities in the now and in the future. It all depends on your personal preference, the target price, what you want coming in, how much risk you want to take into that. So again, this is just to tell you disclaimer that everybody have a different risk appetite, and you got to be careful and look at how much money you have and what you afforded to gain or loses. Some that perspective. And normally I'm more introducing some smaller stock, like somebody called mimic stock, to help you gain some money in short term, but also share with you the long term aspect of how the operation and things going, thinking about why this stock is worth a buy. So China, so to give you a few highlights, China policymakers signal a renewed sense of urgent priority to support the flagging economy. So they are trying to do some stimulus, and also you can see China Yuan has actually compared U.S. currency dollars. Actually, not only China, but if you look at UK, Japanese yen, the Canadian dollars, all declining because of the rising interest rate hike for U.S. dollars and the Treasury yield. Uh, and also in the Russia side, they continue to decide. Europe decided to cutting off Russian natural gas flow to Europe, so then the pricing have actually gone up, and then again Germany were launching or proposing some sort of economic reform to drive and help stimulus to make the people can go through this cold winter coming up, cold winter again. And then also it kind of talking about the war, how it's going, and Russia probably will decide to kind of pull it off. So that's a good news for the stimulating the stock market going up today this morning. And ECB rate hikes by 75 basis point, the biggest increase in history. But that's along Powell's speech and interest rate hike causing some anxiety. But yet, regardless, U.S. stock had moved high on Friday and paving the way for 3-day rally as both the US dollar and Treasury yield took a breath from the recent surge and moved lower. The stock market continued to rally and have momentum this week with S&P 500 Nasdaq compensate back their 50-day moving average. So you can see this graph that very quickly on S&P 500 Nasdaq. It actually gone up quite a bit, and then you can see S&P 500. The other one that gone up quite a bit, and it was giving a pretty good return. So 5%, actually this is Nasdaq 5%, and then S&P 500 4.31%. So all were up the last 5 days, and hopefully continue to have momentum. We'll put it up. There's some properly the way how technical aspect work is when you rebound and hitting the 50-day ranges from a 200 moving average and 50-day average, then that will some sort of buyback point. And of course, you have to look at the macroeconomic factors as well to price in. If for those who listen to my video, knowing that our bet in the market is going down, which it did, and now it's just rebounding from the rate and shade some light. But then it all depends on when Fed rate gonna have raised. It probably driving the stock down again. But currently 0.75% is what pricing in the market. So it's all more about the outlook, how much more rate hikes is going to be in the fourth quarter and also next year. So at this point, trying to talk through few stocks that may be worth a take a look again. This is for those who know, probably can guess what this one is. HYLN. So this stock was actually got a very high level 475, the point from the low end of $2.88, which for those who listen to my video know that it have gone up in more than 50% gain in really with a month timeline. And you can see it starts slipping after the announcement and actually gone back down to pretty low end now at this point. So if it gone down another 10%, which will break through $3, or even with the range, depending on how you're looking at the stock, and how much you're going to put money in. You really, I think it's a good point to buy and wait, and then looks for next couple months, and also the news coming up from HILN this morning saying that they are nominating the Union Pacific former executive to become a CFO. So normally what that meant is the CFO have a good relationship with all these other companies that are using trucks, so trying to gaming and getting more business in the future. So it's a pretty good positive aspect when you got people directing that have relationship with other companies that they use the business with. And you can look at the prospect. This one again is that for those I talk about it very quickly, they will survive even the interest rate hike will costing more, cost of capital for the business. But then at the same time, they start to pick up revenue, have sales. So and they have cash on the balance sheet. So if they survive, 2 years later, I mean, this stock wasn't surprising that it's gone back up to over $10 again. The stock actually raised IPO through the SPAC, and at that time was really the highest point was $52 and drop it to really 2,000. So if you do the perspective, it's 5% from the high end, which should definitely a lot of penny stock was like that. If they survive and they don't go bankruptcy, you look it up, and 10 years later, they actually were gone up so many times, right? Netflix is a good example. It was a penny stock, and you look at it by the last 10 years, you bought Netflix, you will have like 7 times return, 700% return. The other one I want to point out, which is this one, is also the other opportunity. The stock have dropped down a lot, so that kind of shed some light to the opportunity to buy at the point. This is XPEV. This stock actually, if you look at 2 years high turn, it was a $73, just like NIO, and they were in line with Tesla, NIO, and then this type of EV, Chinese EV. The stock actually have an IPO at $17. So now you can break the IPO points. And the stock, if you look at a month ago, it actually was at $24. And at one point, if you look a month and a half ago, it was actually a $29 range. So from 29 dropped down to below IPO, definitely is, I will buy some. And this stock also have a very interesting statistic. Same thing with Tesla is these EV stock really recording and announcing a monthly sales number. So a lot of the time they beat their estimate, and this one have consistently performing better than the estimate. Maybe they underestimate, so to speak, more conservative way. So then you always providing some good news a month end when they announce the number will drive the stock up. Then after that they come back down, and they obviously future is the EV, which is kind of betting on 2025. So this one definitely still have a great opportunity, and if they survive, the stock will gone up at least 200% return, and it wasn't surprising to me. And in the short term, you may come back with 20% return. If the market continue the momentum and push it back up with good news out there. The next one is Aussie, which actually also on Friday, Warren Buffett have announced to hold even more stake of Aussie, and there's a rumor always saying he will take over the company. The highlight of the whole Aussie thing is, if you look at the PE ratio, 6.58, and the market cap $62 billion. So this shape up that, and they are not actually at a high end $77 yet. This started again during pandemic. It was from $82 drop all the way to $9, and that time I sold at $12 because it's a pretty good profit if you think about it. But if I would have hold it for long enough, really like Warren Buffett, more long range timeline liners, you'll make it a lot more, right? So from $9 now it go all the way back to $60. That give you 500% return already within 2 years. So again, this stock, I'm thinking about if they bought it out, then maybe you will go into the valuation of Warren Buffett. Look at the valuation, will give it probably a stake of $70 or more. So I bought it around 58, so I still have some not long ago, so still make some money. The other next one is United Airline. So again, pre-pandemic, looking at pre-pandemic number again, also not 52-week would be 2.5 years ago. It was at $92. From $92, it dropped all the way back down. The stock probably like, if I remember correctly, like less than $20. So right now it's kind of double from a pandemic point at this point, but it's actually have gone up to $50. So I'm betting if you buy this stock right now and waiting for the holiday season again, Christmas time, which a lot more people traveling, because COVID really have to get a stop, right? People get used to that. A lot of people vaccinated. A lot of people already got COVID one time or even twice. I mean, they will have immunity inside of the body, so things should be people really need to would like to travel and really want to reach going out and stuck home. So this is really the stock that are looking for the future timeline. You will have the opportunity to go back up and full times if 2025, right? Everything is, I mean, even COVID in China will be over and Hong Kong over. Things back to normal, people travel and happy again and celebrate with their friends and so on. This stock definitely will be the big shiner probably a couple of years later when I do this video again. So what is the pricing range of buy? If we drop down maybe another 10% opportunity, like you talk about $35 probably. But you could be right now if the environment keep going pushing up again, in a Christmas maybe I'm looking at $45. Next one is robots, which is my favorite. I mean, there's a lot of people still, the little kids still playing this long hours every day. And if you think about it, the stock have actually, again, it was from $141, just point out the 1 year high, and you drop all the way to $70, which kind of really chip by 50% off. And then I go further down, even at one point with $22, and then you come back at $53, and then come back. And ultimately, seeing this stock have opportunity to buy out by Microsoft maybe, and you will be, if they bought that amount, it will be at least at $70. That's a fair market value at least. But probably higher than that. I mean, they bought Minecraft before too. Microsoft bought them out. So it just matter what kind of game of popularity again, the market shares again. So this stock, I look at the opportunity. If recently, if you look at 5 days, what they give you like 11% gain, so it would drop like $38. So around that range probably can be considering, and then the momentum may push it up to $50 again, but it probably will come down again because there's quite a bit more volatility on this stock at this point. But then again, the important part is they have a lot of people buying. They have a unique structure of how they give profit splitting. So in the future, I think this stock will be really going well. Then the next one is Carnival CCL. Of course, there's some challenging at one point if you're not fear of that and bought it around A-lish, I mean, and then you got back at $13 at one point, you made really good profit again. But this stock around kind of sticking around $10 right now. So I would think about at this point maybe a little lower. You can range put yourself again per your preferences. Start looking into nine-ish and then going to the upstring of $15 profitability, in the time space. And then a lot of people, again, in Christmas time, people will go to Carnival anyway. I mean, you go out to cruise. Cruise is really the way to be because it's really cheap. If you have a whole family, I mean, and then you get like, I don't know, buy 4 get 1 free or something, kind of good deal, and then, you did there, you already have, a place to sleep. You have unlimited amount of food. I mean, they have entertainment like swimming and other dancing and stuff. I mean, which pretty in a very relaxing environment. And probably what they discourage you to do, kind of don't try not to use the internet, right? I think you have to pay extra. But if you're in a space trying to be relaxed, really, then I don't encourage you really playing phone too much, but trying to really stick with your family and have a great time. So just start again. Their balance sheet again very strong and solid. So if they if they really run risk of running out of money, they either really borrowing more money by corporate debt, or they can always sell one of their ship and to get cash in. So this one I'm not worried about. They will file bankruptcy at the moment. And the other one is J.P. Morgan, which is bank. A lot of time, many people always said that if the raising interest rate should be benefit for the bank business, they will make more profit. By charging customers for mortgages, or commercial loan borrowing to conduct business. Yet the stock have actually been down, and the lowest really recently, with the downtime is almost $107, less than 110. So this stock really, if you look at history, very have been solid. I mean, the CEO have been leading the company very strong from a really low end. I think back to years ago, maybe it started with $80, really driving all the way to almost $200. So it's a very solid and double the company stock for probably 5 years, I think. So you can definitely look at this stock in the bank. If you ask me, I have to choose Wells Fargo, Bank of America, and J.P. Morgan. I pick J.P. Morgan, and also Citigroup. Citigroup haven't been performing very well. I mean, since then, my old video I recommended buying it, and it got up to around the level $75. Then they kind of took off, and then now it's sitting at $50 there. But again, they survived in the crisis and still there. So. And I think this one could be really good to consider if the market swing backward again down another 10%. I would say 15%, probably $100 will be a good pricing range to consider for this stock. And then another one, which is a different industry again, is Kroger. Some people pick Costco. Costco was down for $460 at one point, and then jumped all the way back up at 560. The year high was about 600 plus. So there's still a room about 15% there. And Kroger, I will see they actually break through. If you look at space, there's 20% opportunity there going back to 1 year high. The stock have a very unique thing is they have a very good supply chain management system. They know what is stock that they need to, how the stock do, the stocking, what to buy, and how they're going to be doing the sales to get rid of the inventory. So the system is very, not necessarily unique, but pretty good. So the stock had done very well. Since pandemic, it was like from 30 some dollars and jump all the way to 60. It's kind of double, right? But a very consistent, a very stable company in my view. So I think this one's still some opportunity to be considered on buying for, if you want to add some stock that more saving in your portfolio. So anyway, that's all I want to share with you today, and hopefully the market continue to be pushing up again. You gotta set up your pricing, buying prices, and your selling price. Buy at the deep sell at the strength, and then the Fed probably will announce interest rise very soon, maybe next week or the week after, definitely in the month of September. And I think there will be a lot more volatility around that time. Thank you very much.